My name is Hooman Sabeti. I have the pleasure of moderating an interesting and distinguished group of speakers this morning who will be talking about Sukuk in various ways. I will just very briefly. You have their backgrounds in front of you. Walid, sitting to my left, has traveled from Egypt to be with us, which is great. He practices, he publishes, has very wide experience in the Middle East, and I'm actually quite looking forward to hearing his perspective on things. He has a background in law, so that of course, naturally elevates the level of discussion of any panel, as you know. Tahir heads asset management at CIMB in KL and has long experience in asset management and as a banker, including at IDB, so also a perspective from a supranational's point of view. And Omar also is a lawyer based in Singapore recently and at Brauw. He also teaches and is active in industry groups. His background includes some litigation, which I think will be an interesting perspective as we talk about Sukuk, because some of the litigation is when the tide goes out and you kind of see what was really happening beneath the waves. So what we've agreed to do as a group is to invite and entertain your questions in the course of the presentations, actually. So if, as people are talking, there are particular things that intrigue you and you want to find out more, feel free to interrupt our speakers or raise your hand, and we'll call on you to pose questions, and I'll probably do the same in the course of the slides. So we have till 10:45 together, and with that, Walid, please.
Thank you. Good morning, everyone. Indeed, we will try to make this as interactive as possible. I feel like we are a very well-informed audience, and some of the basic stuff, if you think it's too basic, just let me know. The agenda, let me see. Today, so these are the points that we're trying to cover during that 15 or 20 minutes. I mean, the definition probably is important, at least to set the stage for the legal structure of Sukuk. And then we have an overview of the market right now. Sovereign Sukuk obviously is in a leading position in terms of overall issues. The basic structure, we just took here the Ijara as an example, but it can apply to any of the other Sharia structures that are available and have been used. And then what is happening currently in terms of the last couple of years, and the impact of the oil, low prices in the Gulf, since this is supposed to be covering the GCC region. And then what happens in light of the challenges facing the global Sukuk markets. So those are, I will try to run through the slides and maybe just stress on the issues that are important for us. The definition is very important because a lot of practitioners tend to use different definitions, look at Sukuk really more of an instrument that can be replaced with bonds. It's more of a debt instrument. The way it has been performing over the years. But according to IUFI, and that's the standard that has been adopted by many banks and many countries, it is really more of an equity-like instrument. So the definition says it's securities of equal denomination representing individual ownership interest in a portfolio of eligible existing or future assets. So it is very clear that the investors or the Sukuk holders are supposed to be owning those assets, so they need to be tangible or intangible assets that have value. They have the character of mal, of a property. Whether the asset start as cash that could be then used to buy certain assets and sell them at a profit, as in the case of the murabaha, sukuk for example, or an asset that is being leased by the investors to the originator, as in the case of the ijara, or in the case of istisna, assets that are being manufactured, financed and being manufactured. At the end of the day, or musharaka, etc., those are assets that have value, and according to the definition and according to the most recent pronouncements regarding the practice of sukuk, those assets have to be the legally owned by the sukuk holders, and they are the only recourse or collateral that the sukuk holders have in case of default. Obviously, that is not the case in most of the issues that we have seen over the years. There could be some exceptions, but in general, that's not actually the case. So the sukuk holder is entitled to the profits resulting from investing those assets, which we call the sukuk assets, and bear the risk that is entrenched in those assets. So they take the concept of al-kharaj bil-daman, or risk, return follows risk under Islamic law. And that's a very important concept. And it is, in my opinion, a good test for riba. Riba is the excess over the principal amount of a loan, but also in sales and in trading transactions. It is the excess value received for no counter value and no risk sharing or bearing by the party. So since the sukuk holders bear the risks of those assets, so if anything goes wrong with the investment, they are exposed to that risk, they are entitled to the profit. Al-kharaj bil-daman. As I said,
Can I ask you something?
Sure.
Is that the reality of it?
That's what I was saying, that it is not actually the reality of it. That's what, if you mean by reality, the way it is has been practiced and the way we write our contracts, I don't think that's true.
Could it be the reality of it and still work? I.e., would there be takers?
That's the $1 million question. You know, we had this meeting at AYUFI a couple of months ago during the annual AYUFI meeting, where a bunch of lawyers and bankers and rating agency guys were sitting discussing this very question: is that why are we so bad in terms of not practicing proper sukuk? And is the really the issue that we won't find investors who would be interested in this equity-like instrument, and basically, or what they're looking for is a debt instrument that replaces a conventional bond? What I gathered from that meeting, and I was one of 2 or 3 lawyers sitting in the room, the majority were bankers and business people, is that the conventional wisdom, no one is going to buy this, because even right now, when it is not priced right, when it is a bit too expensive, people just convert and buy the conventional bonds. So the idea here is that what we want, or what investors want, and bankers agree, at least in that room, agreed, they are looking for a debt performing instrument.
Thanks.
I don't agree personally with that, but I can elaborate on this later.
As a banker, what do you think?
See, it is very important. Is that working? Yeah. It is very important to keep the history why Sukuk came into place in the first place. It was, when you look at 90s, there was actually a need or a demand that there has to be a Sharia compliant way of having a fixed income instrument, right? And that is the key point to remember. Now, as we evolve, a lot of academics come in, people look at it, but the underlying market demand, which started this whole market, actually was that there has to be a Sharia compliant equivalent of a fixed income instrument. And what then the practitioners did was they looked around, and they found out that in the US, well, there is these asset-based instruments, backed securities, which are used in the industry, that probably can be used, and then the rest is history, right? So if the Sukuk is very close to a bond or looks or smells like bond, in many ways it is by design actually, because that is the kind of market it is targeting. That look, if I am a Sharia compliant entity and I want to have a Sharia compliant equivalent of a bond, what do I get? And I get a Sukuk. So the question has, to sum it up, has two aspects of it. Whether one can be very we have all the ideas regarding the Islamic finance and what it entails, and whether they are being captured there, but it is the inherent design. Well, you can have additional products and put it in the market and design it. It can come from the academia, and then you can gradually have it adopted. But that was not the original intent.
Yeah. Thanks. Question?
Sorry, if I can ask Mr. Walid, is there any precedents in Egypt that we can learn from? Because we learned in class that, Egypt kind of started this small denominated bonds for the retail people, so there was massive participation from the ground in terms of, involving most number of people in the structure as well. Are there anything that we can learn from Egypt?
You may be referring to the Suez Canal bond, basically. Of course, has nothing to do with the Islamic finance, and as far as it can be from the subject, but it shows at least that there is there was liquidity in the market. They were able to gather 64 billion EGP, which is a huge amount of money, and about 1/3 of that, or even more, came completely from outside the banking market. So that was very impressive in terms of ability to raise funds. But we don't yet have the Sukuk law, which is something that we're working on right now. And with the new parliament, the idea or the plan is to issue that law within a few months. We've seen some drafts of it, and part of it prepares for sovereign issues to cover some infrastructure projects.
All right, let's
go back to the okay. All right, so obviously the difference between Islamic bonds and between Sukuk and as it's mentioned here, sometimes it is casually mentioned as Islamic bonds, which implies that they're really looking for a bond-like instrument, is different. Because first, obviously, Sharia, a bond is not a Sharia compliant instrument. It pays interest, whereas Sukuk is supposed to be based on the actual results of the investment, the underlying investment. The Sukuk holders receive fixed or variable returns stemming from the performance of the underlying assets. The tenure is how long the Sukuk holder continues to own that asset until the redemption time, where those assets will be sold back to the either in the market, at least in theory, or sold back to the originator. And that is a very important point, because most of the structures we have right now, that obligation we're undertaking on the Sukuk holders, on the originator, to buy back the assets at the same face value of on which of the issue, basically, on which the issue was based. That fixing of the price obviously implies that this is a guarantee of the principal amount of the financing. Of course, we have seen some fatwas pronouncing that this is not an acceptable practice, and that the price should be floating, price of those assets, or the value of those assets should be floating according to market conditions. So this is an overview of the market right now. I mean, in one hand, Sukuk have become almost like mainstream. So you hear the word Sukuk from everywhere, conventional bankers and governments alike. So, you know, GE has issued Sukuk. That's how mainstream it can get. Credit rating agencies now, they have developed ratings for Sukuk. As we all know and have said since yesterday, Malaysia continues to be the king of that world. Although the GCC countries are also in prominent position. Obviously, we have to wait and see the impact of the current oil situation and the wars and the political situation in the region on the performance of Sukuk in that part of the world. So right now, the annual issuance estimated at 114 billion as of 2014, but there was a big decline in number of issues and amount of issues in 2015 to only 48 billion by 2015. So about 29% decline in global issuance, and in Malaysia alone, about 17% decline. In the GCC, as you could see, it's even a bigger percentage of decline, 33%. A lot of countries have used Sukuk, or have thought about using Sukuk at least. So this is compared to the old days where you only had Malaysia and maybe some of the Gulf countries, Saudi Arabia being one of those, using Sukuk, whether at the sovereign level or the quasi-sovereign level. Now we have countries like the UK, Luxembourg, obviously Indonesia, all of a sudden appeared in the market, and we have 6 issuances, last one being in 2015. Even in Africa, countries like Ivory Coast have used Sukuk. As I mentioned, Egypt is one of the countries considering issuing Sukuk. I was honored to work on the draft law that actually still exists, believe it or not. There is a law for Sukuk in Egypt, has been issued during Morsi time, the Muslim Brotherhood time. But that law was not followed by adopting the executive regulations, which are supposed to be really the rules that will govern the issuances and all the details. So that has not been issued, and so it has been dormant. Now, what happened in Egypt, our IFSA has been working on a draft law, and the Ministry of Finance competing with it and working on a different draft law for Sukuk. Ministry of Finance wants to focus on sovereign Sukuk only, so it wants to issue a Sukuk law that covers only sovereign issues, whereas IFSA is working on both. And I've seen both drafts, and the idea, I think, is going to be to try to reconcile the two in only one law, and the new law is not going to be an independent law. It will be by way of amending the existing capital law regulations. IFSA is the equivalent of the Capital Market Authority in Egypt. But it supervises all non-banking institutions. Okay, so this is a structure I think most of us are familiar with. This is a typical Ijara structure where you have obviously the SPV established first. The proceeds from the, I'm sorry about that, I've been working on the screen.
Yeah.
You should warn me.
Yeah. Yeah, I think that the structure might be a bit much detail for morning.
Yeah, no, I mean, I tried to simplify it. It doesn't look that simple, but it is actually very simple. As you could see, the originator, you know, acts in different capacities, right? And you have the investors at the bottom. Those are the Sukuk holders. They contribute the investment or the basically the proceeds of the issue itself to the SPV, the issuer. The SPV is created solely for that purpose, just for the purpose of separating the originator from the investment underlying the Sukuk issue. So as we call it, lawyers, we call it a bankruptcy remote vehicle. Basically, anything that happened at the level of the originator will not affect the SPV and vice versa. So the originator, let's say it's STC, Saudi Telecom, or whatever, goes bankrupt. That doesn't affect or should not legally affect at all the performance of the SPV as long as the investment is doing okay. So the SPV holds the assets which are going to be leased to the originator. The rent received from the originator into the SPV is then distributed to the investors in terms of a distribution or regular distributions. That you can replicate this structure on any other type of Sukuk. So if it is a Mudaraba Sukuk, for example, the SPV here will be Rabbul Mal, will act like Rabbul Mal, and the originator will be the Mudarib in that case. And then whatever investment, return on the investment will be distributed between the SPV and the originator. Same thing for Musharaka or any other structure you could think of. You could use any of the very popular Sharia structures, Murabaha, Musharaka, Istisna, all of these as a basis for the Sukuk. Okay. So now this is how the market kind of looks by region. So this is from Zawiya. We have, as we said, the Sukuk have been issued as of 2015, end of 2015, 48 billion. Number of Sukuk 513 so far. And the outstanding is 338 billion. Projected by 2020 is 395 billion. The currency dominating this is the USD currency, even though Malaysian ringgit is also very popular. As you could see, Malaysia has the largest number of issues and the largest value of Sukuk.
So, Walid, if I understand it correctly, the 48.8 billion at the top is just the issuance volume in
As
1
of
year.
in 1 year, yes.
Yeah, okay. And then the 395.5 billion is the projected outstanding amount in 2020.
In 2000, but yeah.
So that's just 20% growth over the next 4 years.
That and they're playing into this basically what happened over the last couple of years. As you could see, there's actually a decline rather than a growth.
Yeah.
So it's a very moderate, indeed, very moderate growth in light of the political situation and the oil prices. But that can change, obviously, if those factors change. And this this slide shows the in terms of number of issues and of 2015. By 2015, you have about 2 billion Indonesian global sukuk, and you have Indonesian retail sukuk around 1.5 billion. Petronas sukuk, this is 1.2. Riyadh Bank, those are the largest issues in 2015. The market is looking 49% sovereign issues, as we said before, that's seem to be the more popular type of issues, whereas only 21% for quasi-sovereign and 30% for corporate. But you can lump the sovereign and quasi-sovereign together. You could see that this is now the dominating type of sukuk. The issuance by structure, you could see wakala is up there as being, the majority or the most popular. Murabaha is second position, and ijara, which used to be the leading structure, is now in third position. And you still have other structures that have been tested, such as mudaraba, musharaka, and others. An interesting thing, at the end of the day, if you look at a mudaraba structure, you would expect to see, or a musharaka, any PLS based structure, you would expect to see some sort of a risk sharing or risk exposure to the investors with respect to the performance of the assets. And that should be the distinguishing factor between that structure and any other structure, for example, the murabaha structure. But in reality, using that word that Hooman used, it's different. It is not really different. You will find the mudaraba sukuk with the undertaking by the sukuk holder, by the originator, to buy back the assets at the same value in which it was sold at the beginning of the issue, basically creating the same effect of a debt structure such as murabaha. So this is the kind of the geopolitical effect on sukuk so far. As you could see, a steep decline, and the picture is not looking good at all in terms of this trend. There are probably reasons for that. The challenges that we think are facing sukuk. So as I was saying in this recent annual meeting of AYUFI, that we had a session that was just about sukuk and what do we do, where is the market going, what do we do in light of those criticisms that we have been seeing, or critiques by the scholars of how the sukuk have been structured. So those are what I call the Sharia-related challenges and the vulnerability of that instrument. We seem to be at a juncture here, where we have to. We've come to a point where there has to be a decision by all the practitioners or those who are the stakeholders of that industry. Do we really need sukuk? And if we need sukuk, how are we going to be issuing them despite those Sharia reservations? Are we going to force on the market something that the market doesn't want to have? In my opinion, we cannot conclude that the market doesn't want to have those kind of genuine, if you want, sukuk or equity-like sukuk, because we've never tested the market. We offered something that could replace conventional securitization instruments, but we have not created something that can offer an equity-like alternative that could be an asset class that people are looking for, but we've not created that asset class. We've not made that option available to them. So I would be very interested to hear from you. I mean, you obviously as informed and as knowledgeable about this as anyone. So it would be good to get feedback from you about this argument that this is an asset class that should be treated separately. And please, Professor Wilson.
This is a problem at the moment, not higher interest rates, but the fact that interest rates are so low.
Yes.
So the investors are not very attracted to put money into security because the returns are lousy. And obviously the problem is that that they're not likely to get better anytime soon. That I think is the main problem. Not so much the politics or the oil situation, but actually no interest rates on bonds.
Mm-hmm.
That would be my interpretation.
Yes, but that's aside from the Sharia concerns, right? Because I mean, we need to fix that even first in order to be, unless we continue to have those sukuk issues, which at least in Malaysia, I don't think that will be stopping Malaysia from issuing more sukuk. But in the Gulf, that has become now a very important factor. And add to that, obviously, the fact that you don't have a secondary market, which continues to be an argument for not having, growth in the sukuk market. Please.
Yeah. I would like to add to that. See, Professor, when you look, who actually invests in these institutional investors? These are fund managers. Now, for a fund manager, you have a lot of funds which have predefined mandates. And now what that fund manager is doing has a portfolio allocation problem, right? Now, when you have this sukuk, which the way they are, he can easily place them. If I am a conventional fund manager like Pacific Life or a BlackRock of the world, I can easily place them based on my portfolio design, on geography, whatnot, as sovereign, quasi-sovereign, in one of my funds, right? Now, if you have an equity-based structure, there is an issue because I can't place it as an equity allocation because the returns on equity are much higher and the sukuk would never match that. It is irrespective of whether the interest rates are low or high, right? So if you create a kind of a more hybrid, quote unquote, or product or a creature, then it becomes a portfolio for the investors, a portfolio allocation problem. And currently, the main universe of investors is actually, which has very predefined mandates, predefined universes. So the risk is essentially comes from the syndicate that even if you create that, and even if the issuer is ready to take that kind of plunge, and these are two very big ifs, right? Are there essentially a realistic assessment of bias? Yeah.
Very interesting. So, I mean, and also, I mean, on the sovereign level, a country like, please.
I want to go back.
Sure.
Regarding underlying assets, what is your comment on asset-based, asset-backed?
Yes.
I'm reading quite a number of prospectus, especially in Malaysia, sukuk issuance.
Yes.
Throughout the years from 1980s to recent, I found that the practices is mixed. Some asset-based, some asset-backed.
Yes.
Can you comment on that?
Yes, I mean that goes to the very first few slides talking about the definition and what do we mean by sukuk really, and how do we use the assets of the sukuk? Are we using the assets just to justify issuing sukuk, which is the asset-based where the Sukuk holders are not really the legal owners of those assets, whose value really do not reflect the value of the issue itself, or doesn't matter, they're irrelevant, and where the Sukuk holders have a recourse against the originator, direct recourse against the originator, just like in any debt or a bond issue? Or do we have real assets which have been valued by experts and whose performance is going to be responsible for generating the return that will be then distributed to the Sukuk holders, and the legal ownership of those assets belong to the Sukuk holders? Those are the main kind of differences that when you look at the prospectus, you could tell immediately what kind of an animal we're dealing with here. But it's at the end of the day, as we said, the majority of them, at least the ones I'm familiar with, are really have the recourse issues, have some sort of securities against the originator, regardless of the performance of the assets themselves, and have then, the most important thing I forgot to mention, is the purchase undertaking at the end for face value. That's for the asset based.
So in terms of Sharia, is it both okay or?
No, in terms of Sharia, the Sharia have ruled out the asset-based structure.
I don't know about that at all, actually. So every one of those sukuk comes with a fatwa from qualified scholars. So they are acceptable to the scholars. So they're compliant according to those scholars. First of all, I would just say, those terms, asset-backed and asset-based, are really poor choices of terminology to describe what's really happening. The question really is recourse. What do you have recourse to? Do you have recourse to an obligor, or do you have recourse to assets? I can count on one hand the number of sukuk where you have recourse to assets, proper recourse as it's understood in finance. Security is not recourse. Security is something different. So a secured sukuk is not asset-backed in the sense that asset-backed is really understood in the market. Asset-backed securities have been around since 1980 or so. Sukuk have been around since about 1990 or so. It was a misnomer from day one to use the term asset-backed in connection with sukuk, and it's kind of taken on a life of its own in the market. It's very difficult to create an asset-backed security, generally, especially in a new legal system where it hasn't been done before. It is doubly difficult to create a Sharia-compliant asset-backed security. That's why very, very few of them are done. Also remember, asset-backed securities are based on financial assets. There are very few Sharia-compliant financial assets to begin with from which to create a Sharia-compliant asset-backed security. So I hope the market moves away from using those terms and really focuses on what there is recourse to, assets or obligors. But most sukuk are structured to give you recourse to an obligor, not to just a financial asset. We'll come back to that.
Yes.
Let's for the Malaysian sukuk.
Yeah.
The Alijara, it was an asset-backed sukuk because there's a transfer cycle from the originator to the government.
But let me ask you this: in that structure, okay? In that structure, if the obligor, if the obligor stops paying under the lease, then what happens?
The obligor is the SPV.
No, the ultimate I understand. The ultimate obligor. If the ultimate obligor, the borrower, stops paying under the lease, then what happens?
Okay, the asset was leased to the government, and the rental is being passed.
If the government stops paying, then what happens?
Well, there's a purchase undertaking.
If the government can't pay, so it stops paying, then what happens?
It is a contract to buy back.
I understand, but the government.
The government may have to spend money and pay back.
It's not. So this is not an asset-backed security. You actually don't really have recourse to the asset. You have recourse to the government. If the government pays, you get paid. If the government doesn't pay, you don't get paid. It's pretty simple. Anyway. So let's finish up your thoughts and then move on.
Sure.
To
I mean, we're almost done. I think now the question is actually to all of us. Those are just questions that, Professor Henry, imposed on me that topic, geopolitical. You want to turn me into a political economist somehow.
I want to hear more about preferred stock.
Ah, okay. Not anytime soon, but basically, that's the where we are now. It was interesting what Professor Wilson said about the demand for Sukuk, or in light of the current crisis, and the fact that it's not really all about the oil price crisis right now. But a country like Saudi, for example, what would they prefer to do given the budget deficits, which is a new term they have to deal with over the last couple of years? This, a new experience for the Saudi government to deal with. Would they be looking for a Sukuk? Would a Sukuk issue be attractive for them, or would they just, as they did recently, just go and issue bonds? What is the argument for Sukuk? And what is the argument in light, especially of the pricing of Sukuk? And it is clearly a more complex, more expensive if you compare it to other debt issues. But if you have a true Sukuk, equity-like instrument, it's a completely, as you said, it's a completely different asset class that should be priced separately. So those are the question. Where do we go with Sukuk? What will happen with the market? Finally, there is an argument also for issuing green Sukuk, similar to green bonds, for example. But I think at the end of the day, it's a pricing issue. It is market conditions that will decide whether those Sukuk actually will be attractive or not. Thank you. Those were my remarks.
Thanks very much. Tahir, we'll turn to you. And could you, in the course of your remarks, also talk about how an issuer might think, or what an issuer might think about in choosing whether to issue a bond or a Sukuk, as Walid referred to Saudi Arabia.
Thank you very much. It's a pleasure to be here. Quite a bit of early part of my presentation has been covered. What I'll do is give another take on those certain topics here on a very, very quick fashion to highlight. And why I want to do that is provide a context, because I want to discuss certain innovations that are happening in the marketplace, to what extent the market, where it is headed, and then I want to touch a bit about, well, what is the context in which Sukuk can flourish in a particular market, and then with that framework in mind, we can see whether there is a lot of talk about China, right? Is that the next frontier? Will Sukuk take off? What kind of interest is there? So I'll be very quick so that we can have a fair bit of time for discussion. First, a little bit about ourselves. Well, CIMB is a universal bank. Just want to highlight, we have 40,000 staff, 13 million customers, more than 1,000 branches. CIMB Islamic is the Islamic franchise for CIMB Bank, and we operate on a dual banking model. And what that means is that we tap into the overall base of our footprint globally, and essentially are there wherever these CIMB is present. Over the years, we have won many awards for our contribution in Islamic finance. I just need to highlight one. For the last 9 years, 7 years, CIMB has been top of the league tables in Sukuk issuance, and the remaining 2 years we were number 2. So a lot of contribution from us, and we are very proud of that achievement, right? So my friend here has already highlighted the definition of Sukuk, but what I want to point out is that it is the undivided shares in the ownership of tangible assets. So assets can be tangible as we understand. Usufruct, so the beneficial interest, that ownership can be. So you may not have a direct ownership, legal ownership on the asset tangible itself, but on that use, or it can be services. And why these three aspects are important is because where the current innovations in Sukuk lie are essentially in these areas, looking at the definition of the assets that can underlie what can be accepted by Sharia, and extending the boundaries of these. Wouldn't delve into much on the differences. The main point to highlight in the comparison as well, there is an added layer of Sharia compliance, which is a no-brainer as far as Sukuk are concerned. Why Sukuk are there attractive? Of course, if you are an Islamic entity, that's a much easier question to answer. But even if you are a regular agnostic, agnostic in the sense that without any preference of either Islamic or conventional, why would it make a commercial sense to have a Sukuk issuance? Well, if your target geography is Islamic markets, naturally it helps your profile. It does expand in your investor base without reducing the existing conventional investors. So in terms of the offtake, in terms of the portfolio managers, the fund managers who can invest in the other entities. So what it does is it provides you with a wider base which would be interested in your security which you are issuing, and what it does is this translates into better pricing for the issuer, so that there is an underlying economic incentive. If there is more demand for your issuance in the primary market, you can actually price it tighter and you'll get a better pricing. And in fact, that has been tested in the market. The government of UK Sukuk was actually priced better than the conventional issuance of government of UK of the same tenor, right? So this is not something which is just for the sake of it.
But that's unusual, right? It's unusual for it to price tighter than the conventional of the same issuer, isn't it? Or is it?
Most of the time, majority of the cases, it will be exactly the same. Especially, and this has been, in fact, there has been a couple of studies done. The older one actually had Sukuk worse off by 2 basis points, and there the data set was the Chagamas Sukuk. This was done in 2007-8. So they were exactly identical issuances, but there was 2 basis point yield difference. But if you look at more cases later, this has not been and that study was significant, had a significant t-statistic associated with it. But if you look at more recent issuances, though there has been no formal study that I have personally encountered, probably food for thought for NCF and their people there. But when you look, there have been almost all the issuances have been at par, and in a few cases, then it has been tighter. Right. But there has been no case in last 6-7 years where I am aware of where it has been on a similar issuance worse off. That issue is taken care of.
So from an issuer's perspective, the funding cost is likely to be almost identical.
It will be.
And what about the transaction cost?
Yes, and the transaction costs, and I'll come to that.
Okay. Well, you can come to it.
Yeah. So, okay. So with that, Walid has already touched on the structures, primarily Ijara, Wakala, Muraba, and Musharika. And I want to highlight 3 things related to these structures, which are currently in vogue and which are not, right? So Sukuk, of course, started with a lot of Ijara-based structures. And gradually now there has been a shift towards Wakala-based structures. And why that is the case is primarily the amount of, or the quantum of underlying assets that you need to use for a particular size of issuance. And what has happened over the years is initially the Sharia scholars started with that, and it has, without going into a very good explanation of asset-based or not, there has to be an underlying asset, and initial thinking was it has to be 100% of the underlying asset. gradually the views have moved in the industry to 51%. And lately to 33%. And that is primarily derived from the saying of the Prophet that 1/3 is a lot, right? So there is a basis for scholars to understand and say that, look, even if in a particular issuance at all times, if your size of issuance is backed by 1/3 of the assets, right, whether then you can essentially have a Sukuk issuance. I want to make another point on the assets, which is typically missed in these kind of discussions. The reason people think that there is an underlying asset, and that's why where the argument comes in is that, well, do you have a recourse to these assets or not, right? Which is not, in most of the cases, hardly. These are not asset-backed securities. The underlying assets are primarily needed to ensure the tradability of the Sukuk. And that is a point which is not often mentioned in these discussions, because the point here is that money can only change hands at par value, right? It cannot be sold at a discount, it cannot be given at a premium, right? It's money, right? But Sukuk, a listed Sukuk that is listed, essentially because of the market fluctuation, the price of the Sukuk changes. Now that certificate, if there is no underlying asset, essentially represents a debt. So which means that you are encountering a situation of what they call in jargon, bayal dayan, right? So that changing of debt, then at a price other than the par value is not allowed in Sharia. So the main reason there is an emphasis on the assets, underlying assets at all times, is to avoid exactly that trading issue. And that is why over the life of the Sukuk, you have to have a certain percentage. Initially, the thinking was 100% is good enough. For sovereigns, it became 51%. And lately, what we have seen, like in government of Hong Kong, government of Malaysia, Sukuk, it is 33%. So that's one reason of shift from Ijara to Wakala, because it allows, I only need to have 100 million of assets to have an issuance of 300 million, right? So move there, because then I can. The Murabaha, the commodity Murabaha structures, Malaysia has a lot of, in fact, huge amount of ringgit issuances, which is 100% based commodity Murabaha. And there is a difference. And again, this is a nuance that needs to be touched. Commodity Murabaha based Sukuks are not allowed in Middle East. And that is, again, the issue of the Bayal Dayan. The Malaysian scholars' understanding is that where does this debt come from? So if it is a part of an asset-based financing, well, you can, right, still trade it. Well, if it's a debt-based, it's coming from a loan, you can't. The Middle Eastern school doesn't make this distinction, so that's why you don't see a purely 100% commodity Murabaha-based Sukuk out of Middle East. So just wanted to know that. The problem with the Musharaka, and which the Walid also highlighted, was that it is the purchase undertaking, which is globally, when you put in a purchase undertaking, it becomes a kind of a guarantee. It ceases to be a Musharaka, so your risk-reward sharing is not there. So I've partly covered all this, so I'll skip that. Essentially, I've also made the point that why Wakala is in vogue is because it allows a larger size of issuance. You actually mix in a Wakala structure an asset, whether it's a service, whether it's a beneficial interest, or whether it's a pure equipment ijara asset, along with a commodity Murabaha. And certainly for an issuance worth 300 million, you only need 100 million of assets, right? So yeah, that is there. Market has been very nicely covered. Just to make a point, so if you look at global Islamic assets, Sukuk are around 14%. The total Islamic finance industry is expected to surpass around 4 trillion by 2020, according to certain estimates. We should keep in mind, well, predicting is very hard, especially when it's about the future, right? So we should take these numbers with a fair bit of caution. This is another look at the trends. The peak point has been 2014, 46 billion. The key point to see is essentially in this graph is growth, which is from 1.4 billion in 2000 to touching to 46 billion in 2014. As our friend noted, that it has dropped significantly to 34 billion.
But Sukuk are not really immune to cycles if you look at 2007 and 8, and but it does pick up. So of course, the issuance of Sukuk is related to how the global economy performs. Sovereign Sukuk, essentially why, I mean, of course, also been touched by my friend. The key point is what sovereign Sukuk do is essentially do two things. It essentially sends out a signal in the market that, look, the existing laws and existing regulations and systems are, if I am a private entity, right, they are in there, and I don't have to worry about those uncertainties. So sovereign Sukuk issuances kind of essentially send that kind of a signal in market, which then encourages or is supposed to encourage the private sector and other corporates to essentially tap in that. But there are caveats to that. For example, and I'll come to that later in quickly, when we talk about, for example, in Indonesia, what happened was that the law that they passed was essentially very kind of ring-fenced for the government, right? So when you looked at the corporate entities, they couldn't benefit. So it raised the profile of the country, the government got the money, it's a big step forward, but it kind of didn't get there where it should have gone, right? So that's the underlying point. That's a big snapshot of the kind of issues who have approached sovereign issues. So we have Malaysia, Pakistan, Bahrain, Indonesia, Turkey, Qatar, and whatnot. So the latest being on 27 January, government of Sharjah, right, announcing its Sukuk. And that's also a flavor of structures, mostly Ijara based in early years, if you look, right, till 2013. And then you know the trend, if you look at from 2015 onwards on sovereigns moving towards Wakala based structures. So I think this is where the key point lies here. Whenever you look at a Sukuk market, the key elements for a market to have Sukuk, and this will lay us to address a question of whether how we should look at China, right? So in that regard. So for Sukuk to be initiate and flourish, well, we need to have tax neutrality because and then, of course, costs of issuance, and then the overall legal and regulatory framework. Because otherwise, if any one of these pieces is missing, actually, no matter what the great intention is, in the end, the market is actually the issuance, and where there are takers of the Sukuk, that's not going to happen, right? So the tax neutrality means that, well, in a financing transaction, if whether it's an ijara, if I buy and sell, in an actual buy and sell, there will be a tax. Now, if I'm paying tax on that transaction, naturally the whole economics of it goes away. So it has to be tax neutral in that regard. There has to be a cost neutrality too in terms of the number of advisors, the understanding and all. If that is not there, then, well, for the issuer, I don't want to pay a premium for issuing a Sukuk, which is not giving me a price advantage in terms of it. So the calculus changes. But we have lately found out that cost neutrality in terms of an issuance is not as much of a problem. The knowledge base has become wider. There are legal firms universally, and that is there. As far as Sharia advisory fees is concerned, many of the times it's so small about the quantum that there are many instances, even CIMB Islamic has waived the Sharia fees, right? So this is not where we make money on it, on Sukuk. We make money on its trading, right? So, and appropriate legal and regulatory framework. So if there are defaults, etc., which our friend Omar is likely to cover, so that has to be there. So if there are issues in that regard, we'll have a problem, right? So, and this legal and regulatory framework, the examples, Malaysia has a whole series of acts, steps taken over the years, and that is the reason why Malaysia is a larger market. So, and what you see is that as these, it's not updated, it's still until 2011, the data, but the proportion of conventional versus Islamic has altered as more and more regulation has come in, because, you know, it becomes attractive for the issuers to do Islamic securities, right? So that is the underlying point here. Government of Hong Kong decided that, well, they want to retain their place as a financial center in this part of the world. In July 2013, issued the act, made the playing field equal. And as we see, the result is there have been two issuances in 2014 and 2015, right? The first was Ijara-based, by the way, and the second one was Wakala-based. So trend shift also there. Similarly, I've touched on UK. There has been certain steps taken by the government essentially to create that environment, the three factors, the tax neutrality, the cost neutrality, and legal and regulatory framework. That has been done, right? So though the government has only had so far one issuance out of UK, but the prime interest of the non-Islamic majority countries like Hong Kong and UK is because they want to keep and retain their position there. The same Luxembourg has issued a Sukuk. South Africa has again put in the regulatory framework. Indonesia has, and Indonesia has been very active. The sovereign. Singapore has again put in incentives, but there has been a little bit of ambivalence lately in that regard. We as CIMB have been in touch with the government and hopefully see the interest there. So with that context, I'll converge this discussion to China. So when you come to China, then the question asked is, well, is there a framework? These are the questions one needs to answer. Well, is there a framework necessarily in place? Well, when you would look at any structure, whether you buy and sell these beneficial interest in assets, what kind of, can you first really do that? Is that transfer recognized? Are there any government approvals required in that regard? Well, you need to have trust laws there, and then the legal frame of China. Naturally, the SPV issues the assets in trust, no matter what structure you end up with. With that, are there? So when you look at all these questions, your answer is not in affirmative, right? So it's kind of a negative. We are not there yet. There's a lot of interest. There is a lot of actually a push on the political front from the Chinese government. This is what we have encountered also in the government of certain provinces, right? That is there, and we are working on some ideas. But essentially the issue we are faced is then one tends to gravitate towards commodity muraba based sukuk, and there the issue lies, well, then what is the global acceptability of that? The other is then you kind of, to circumvent part of those problems, you kind of tend to explore the possibility of issuance either out of Singapore or Hong Kong. So these things are there. We are likely, hopefully, going to see some sort of issuances, one or two issuances this year. There is a lot of work being done. It's still not public yet. But there are strong challenges, and primarily because there has been no top-down impetus as such from the authorities there on the mainland China to remove these kind of uncertainties. So I think I addressed your question. So that kind of concludes the points that I had on China. But the points, I think, on innovation, I think there are 2-3 remarks I need to make. Lately, what has happened is, initially we had assets. First comment on innovation is on the assets, right? And even though it's all asset-based, the initial assets used to be land. The good thing about land is it cannot be destroyed, so you never encounter a situation legally of total loss. Or equipment, whatnot. Then the major innovation that has happened is the services. So if you look at the government of Malaysia Sukuk of last year, right, 2015, what it used is it used the right to transportation services. So your JPJ, the issuance of licenses and associated revenues are essentially the underlying asset, right? And that too, again, there is a dimension. The view is you can actually use 100% of services, or can you for the tangible portion, or do you really need to combine with the equipment and all. So what in that case they did was they used actually 27% of the assets were hospitals, the 26% were the right to these services, and then the remaining 48% was a commodity Brauw, right? So that is one direction. For example, Exiata in its issuance has used airtime vouchers. So it is the time at which through which you can talk, right, is the underlying asset, and it is considered as tangible as it is. So there is innovation in that regard. Of course, there is innovation in the ratio. Till government of Hong Kong, all the sovereigns were at least 51% tangible assets. So government of Hong Kong was first where, as a sovereign, you had the asset threshold of 33% for the private sector, but the scholars were of the view that sovereign can never be short of assets. So why 33%? But there was a big focus because the impetus for government of Hong Kong was, and which was the argument made to the Sharia committee, was that it is not a question of whether they have the asset or not. They are sitting and want to signal that, well, 33% in Hong Kong for private sector is doable. And that is the signal, and it was on that basis that was allowed. So with that, and the last one, I think I've taken a fair bit of time, and I'll conclude by saying, use of proceeds is a very critical element, and the extent to which where it goes, Middle East has a certain kind of a more shorter threshold on where to get. But in the Malaysian side, in fact, in that case, Malaysia is more conservative. They would actually pinpoint that the use of proceeds has to be Sharia compliant, and if you can't ensure that, you will probably not get a CIMB Islamic approval on that Sharia transaction. Goldman Sachs, which is a very controversial case, actually suffered on the use of proceeds, and they had to call back their first issuance way back. There were other reasons for that too, but that's a discussion for another day. Thank you very much.
Thank you, Tahir. All right. I think we're going to get now to some of the difficulties that can happen in the course of the Sukuk. So, Omar?
Thank you. Well, good morning, ladies and gentlemen. First, I'd like to take the opportunity to thank the Middle East Institute for having all of us here, and Professor Overy in particular for his efforts to bring together academics and practitioners to talk about a subject that's close to our heart. So thank you very much for that. My focus today is indeed on a legal perspective, and I will try to avoid repeating what has been discussed by the other utmost interesting presentations, and focus mainly on a transnational legal framework for Sukuk and why it is relevant and what it would mean in the case of defaults. Now, I would like to take you back to 2008, because that has been the inspiration for this presentation and also for the thoughts that gave much more papers, etc. later on, when the world was basically dominated by the financial crisis in the United States, or that started off in the United States. What I found interesting back then is that if you would look at the Sukuk markets and the capital markets, let's say in the Middle East, in Southeast Asia, it would seem that the impact of the financial crisis was not as big as the impact of the IOV resolution that was issued in 2008. And obviously it sounds funny if you put it into perspective, but what we saw back in 2008 is that after the issuance of the IOV resolution, as the other two speakers pointed out, we did see an impact on the structures that were used. Before that point in time, it was mainly equity-based structures, the Sukuk al-Musharaka and the Sukuk al-Mudaraba, as Walid pointed out. And actually from 2008 onwards, we shifted to the Sukuk al-Ijara structure. Now, as a practitioner, and Hooman already pointed out that I indeed started off in a litigation practice where you always think about possible litigation scenarios. What I wondered was, would this give the Sukuk holders back then an argument to start litigation, saying that these structures that were in the market already were non-Sharia compliant, but they were sold to them as Sharia compliant? Because George Usmani was saying back then that 80% of the outstanding Sukuk were not Sharia compliant. And if that would happen, what would that mean for the Sukuk holders? Could they enforce their rights? Would they be entitled to what was promised to them? Obviously, and I should say luckily, that didn't happen in the real world, But there was another test case a year later where it came really close down to litigation, and I'm quite sure that this audience is aware of that, in 2009 when we had a default on the Nakil Sukuk. Also in the Nakil Sukuk, it didn't lead to a litigation case because the government of Abu Dhabi gave a loan to Dubai so they could restructure their debts. But this is a point where it really came close to litigation, and it's also a test case that I would like to, or a case study that I would like to use throughout this presentation while I talk about this transnational legal framework. So my presentation basically focuses on two parts. The first part is mainly on the question why we need a transnational legal framework, in my opinion. What's the main reason for it? And in short, I think there are two main reasons for it. One is that there's a risk of Sharia compliance that we can address, and the other one that closely follows from that is that there's a risk of legal enforceability that we could address with it. And once we've discussed the need for it, I will discuss what I have in mind when I talk about the transnational legal framework for Sukuk. And it, in short, comes down to understanding the Sharia standards, translating them into legal requirements that should be respected, and implementing those requirements in each jurisdiction so that you have standardization and harmonization in those jurisdictions. But I'll discuss that in more detail. Just going back to the Dubai debt crisis and the Nakil Sukuk, just to give you a bit of context, I'm sure that most of this is known to you. But at the end of 2009 in November, Dubai World announced that they would have a restructuring of their debts. And their announcement caused disturbance in the capital markets, which was called in the media as the Dubai debt crisis. Now, the main concern here was that there was a Sukuk outstanding by Nakil, and there was a Sukuk that they could probably not repay. There would be delay in repayments of the periodic payments. And the first maturity date of the maturity date of that Sukuk was also a month later, and in December 2009. So that restructuring caused much distress. And the main reason was that when the Sukuk holders looked into their documentation and they were looking into possibilities to see what they would have indeed recourse to, as the other speakers have pointed out, they noticed that they could not rely on the level of protection that they were hoping for, actually. Now, what happens here is, just to discuss the structure shortly, because the structures have been explained quite well by the other speakers. The structure was called a Sukuk al-Ijara in the prospectus, but if you would have a closer look to it, it was actually a Sukuk Manfa Ijara structure, which is obviously fine because Tahir pointed out that the use of usufruct in a Sukuk structure is also accepted from a Sharia perspective. But what we had in place, if you look at the structure, and I will not get into the details of this, we had a lease and lease back. So there was a lease of 50 years of leasehold rights to the SPV and basically to the Sukuk holders. And there was a lease back of 3 years for the time that the Sukuk was issued. Besides this, there was also a collateral structure in place, and basically this SPV had rights of mortgages on the underlying assets. The underlying assets were land and building used for an island that they would build twice the size of Hong Kong. It was called Dubai Waterfront. They had rights of mortgages on those land, and there was a share pledge on the shares in the one of the subsidiaries of the originator.
Omar, can I ask you, what do you mean by rights of mortgages?
It's a mortgage right. No, yes, it's a mortgage.
It's a mortgage. Okay.
So what happened here? The complexities that came up basically boil down to 2 points. There was much more because there were also questions on whether the government of Dubai had given a guarantee and whether you could enforce a guarantee against the government of Dubai. But those are aspects that I will not discuss in more detail. There were two things that I found quite interesting. One is that the leasehold rights were not registered in the public registers back then. So this would mean that if the Sukuk holders would enforce their rights, they basically had a contractual claim to Nakil only. And because these leasehold rights were not registered from a property law perspective, they could not enforce those leasehold rights. So in the case of bankruptcy, you could come to Nakil and claim for money, but Nakil would say, oh, excuse me, claim that you have leasehold rights. But Nakil could say, you know what, those leasehold rights are not perfected, they're not valid, so you basically only have a contractual claim. The second point was that the mortgages were not registered either. So what you usually would rely on as an investor is that you have security rights, so you have your mortgages, and if there's a default, you will enforce your mortgages. But this caused much disturbance because actually the rights of mortgages were not registered, so they were not perfected, which meant that they could not enforce those either in a default scenario. And this actually caused main concern. I mean, there are two things that you could highlight here. One is that the question comes up whether then this was indeed a Sharia compliant structure. Obviously, the Sharia scholars are giving their fatwa, so I agree with Hooman said earlier. If it is approved, I would say that it's a Sharia compliant structure. But what definitely was an issue is that that Sharia compliant perspective could not be upheld in court. So you had an issue of legal enforceability. And I think this case study clearly shows why there is a need for at least a legal framework, whether you call it a transnational legal framework or another framework, where we deal with these kind of questions. Now, when I talk about a transnational legal framework, I'm talking about a legal framework that can be implemented in any jurisdiction, regardless of the governing law. I know that sounds quite controversial from my perspective, and we have two other lawyers, or one of our guests that used to be a lawyer and obviously a practicing lawyer. As a lawyer, we always say, you know what, the law of my jurisdiction is so difficult, it's so different from other jurisdictions, you cannot compare it. So I know that it's controversial, but I think if you look at this in a bit more detail, we can come up with requirements that you should respect in your jurisdiction. And then it's up to you as a lawyer to look into the laws of that jurisdiction and to decide whether those requirements have been met. So what we are talking about is first understanding the Sharia standards, what's in there in the IOP standards, what's in there in the Sharia standards of the Securities Commission in Malaysia, translating those Sharia standards into legal requirements, and then making sure that those legal requirements are met in the local jurisdictions. And this is not only academic stuff, if I may say so. We've been advising the government of Dubai and actually also the government of the Netherlands, where I used to practice for a long while, on these structures and talked about them, gave them advice on how you could solve some of these issues. And also on the level of a particular institution, it can result in consistency in your Islamic financial products if you keep this in mind. Now, how does it work? I would like to take the Sukuk al-Ijara structure as an example and talk you through the Sukuk al-Ijara structure and describe what I have in mind when I talk about the transnational legal structure. So I'm grateful for Wakil for explaining the structure, because that makes my life a bit more easy. But if you look at the definition of the Sukuk al-Ijara structure in the Sharia standards, what you basically see is that the Sukuk al-Ijara from a Sharia perspective has been defined as certificates that give you entitlement to the ownership of underlying assets. So if you would draw this down in a structure, this is what you would have. That from a Sharia perspective, we're saying that there is an originator that enters into a sale and lease back with Sukuk holders, and then those lease payments are being paid for the Sukuk holders. If you closely look to the Sharia standards, this is the exact wording. Now, the legal reality is this. And obviously this is known to everybody because, first of all, I noticed yesterday that the audience is quite well informed and the other speakers discussed this in more detail. But this obviously differs from what we see in this figure. And I think the things that I would like to focus on from a legal perspective are a couple. One of them is that you might wonder why we are changing this simple structure into a much more complicated structure. Well, the first thing is that if you would like to, let's talk about real estate. If you would like to transfer real estate from an originator to Sukuk holders in capital markets, which are thousands of investors, it would be administratively it would be impossible, because you have to fulfill all these registration formalities for each investor. When they trade it, you have to do it once again, because as Tahir pointed out, it's mainly an issue of tradability to have these underlying tangible assets. And it's impossible. So the SPV is being incorporated only to facilitate that transaction and to make sure that the SPV holds those assets for the Sukuk holders. That sounds quite straightforward, but if you look into this closer and we focus on this part from a legal perspective, we should keep in mind that we have a new separate entity that's coming into place, which is the special purpose vehicle. And one of the things that we have to keep in mind, and I think the Nakil Sukuk is a good example of that, is that if there is no transfer of legal ownership in the first place to the SPV, then we have a first problem there, because the SPV is not holding those assets for the sukuk holders. I think what I found quite interesting here, and it's an anecdote I would like to share with you, is that I was working for a while in London as a finance lawyer, and back then we were advising one of the Islamic banks on the issuance of a Sukuk al-Ijara structure. Now we gave the example of the Nakil Sukuk back then as well, and we were saying, we were talking with one of the Sharia scholars, and we were saying, you know what, we should make sure that there's a valid transfer from the legal ownership, just to make sure that we do not end up with the same situation as was the case with Nakil. What I quite found interesting, and it struck me back then, and it stayed with me until today, is that the Sharia scholar was saying, you know what, I am not interested in that. Because from a Sharia perspective, the transfer is valid if you have a valid contract under Sharia. Sharia does not explicitly refer to registration formalities whatsoever. So from a Sharia perspective, if you're saying that there's a contract, there's a transfer, then we have a Sharia compliant Sukuk al-Ijara in place. And it will not affect our Sharia compliance review, whether there's a legal and validly transfer of the assets or not. I mean, from a Sharia perspective, this perfectly makes sense, but at the same time, you could wonder what the word of a Sharia compliant structure is if it's not legally enforceable. Because you're selling Sukuk to Sukuk holders, telling them that they're entitled to something from a Sharia perspective. But by the time that you're saying that, or at the time that you're saying that, you know that from a legal perspective, they could never enforce those rights. And obviously, it's also a different view on things. Maybe you could say it's a Sharia view on things, and you're looking at it from a legal perspective. But even if that were to be the case, then I think it proves my point that we then need a legal framework that clearly sets out what we should, how we should deal with this in that case then. And in short, I think on this level, the most important thing is that there's the transfer of the legal ownership, which obviously has been discussed in many academic papers. At the same time, even nowadays in practice, we still see structures, and I'm not saying that most of the structures are not respecting this. I would say most of them are, but we still see a lot of transactions where there is not a complete legal, valid transfer of ownership.
Omar, can I ask you?
Please go ahead.
Why should there be a transfer of legal ownership?
I think if the Sukuk are being sold as a Sukuk al-Ijara, and you're saying that you as a Sukuk holder basically own the assets from a Sharia perspective, then I think you need to really transfer that ownership to the SPV as well.
But as you said, the scholars are indifferent as to whether there's transfer of legal ownership.
Yes, but at the same time, if you would ask the scholars whether the Sukuk holders should be entitled to those assets, they're saying yes. They should have recourse to those assets, but they're saying it's up to you lawyers to work on it and to make sure how it works out.
I think the point that the Sharia scholars are making is that it is not a Sharia requirement to have a specific form, legal form, that is basically the vehicle for that transfer. As long as that transfer is recognized under the relevant legal framework. So that's a very important point. So let's say we're in Egypt, and in order to transfer any property, you have to go to the notary public, right, and do the transfer before the notary public and have the signature and have the land or the property registered in that register. The Sharia scholar would say, if you want this to be a Sharia compliant, you need to make sure that the relevant law recognizes this transfer. It's not the enforceability concern, because you're right. I mean, whether it is enforceable or not, but the law has to recognize that type of transfer.
Yes.
Otherwise, the contract itself is not enough to really justify the legitimacy of that transfer.
I fully agree, and I think that exactly proves my point, that indeed their review is limited to how it should look like from a Sharia perspective, but they're asking us as lawyers to make sure that that really is respected in that jurisdiction.
Yeah.
Yes, indeed, I fully agree.
So the other maybe subtle point here is that ownership is actually a sort of it's a complex thing. It's not just black and white. You own it or you don't own it. There are many flavors of ownership. There are many rights sort of bundled together in what we call ownership. And And you can have some of those rights, but not all of those rights, and still be called the owner. So you can have the right to use something, but not the right to transfer it. That's a variety of ownership. You can have the right to transfer it, but not the right to use it.
Yes.
You can have the benefit of the fruits of a tree without owning the tree. That looks like ownership. You can own a building without being able to touch the building or make any change to it, if it's a protected structure.
Yes.
So ownership is complicated, and we use it as if it's not complicated, as if it's not sort of divisible, but it is. And so I think we have to.
I fully agree, and I think it's probably a lowest view on things, that I fully agree that ownership can come in various shapes and forms, and we can we should indeed be specific on what we refer to. And to be honest, we
have this idea of legal and beneficial ownership.
Yes.
It's not that complex.
It is.
But I think. Please go ahead.
But as we see in the infrastructure, the legal ownership still held on to the originator, but the beneficial ownership goes to the SPV in some sense.
Yes.
Right? In some other cases, the entire ownership goes to the boss, to the lender.
Yes.
In some cases, partial ownership will pass to the lender.
Yes.
So again, the complexity of ownership cannot be exaggerated, because you have to have a clear line to understand what exactly is the transfer that Sharia demands. Is it total transfer, legal and beneficial? In banking, as you know, it is basically beneficial ownership. Right?
Well, I think I'll come to both points with my next slide. I think the next slide perfectly also explains that there are different shapes and forms, but at the same time, indeed, you need to have, and that's what I refer to as the transnational legal framework, you need to have a framework in place that clearly says what's the Sharia view and how should we structure this legally, because you can obviously do a lot of legal engineering here and come with all kinds of forms of things that might work, but you should be clear on what you're promising the sukuk holders, and if you promise that to them, they should be entitled to it. Period. So, and I think that's one of the things that has not been discussed that much, not in academic papers and not in practice either. And that's the relation between the SPV and the investors. Because if you closely look at that relation, the role of the SPV is one of the things that we should look into. And it was already pointed out that the SPV is indeed regarded a bankruptcy remote vehicle. So what we say is, before, in my previous slide, I pointed out that from a Sharia perspective, it's a sale and lease back between the originator and the sukuk holders. So when the SPV comes in, the SPV must be a bankruptcy remote vehicle, because there should be no new risks and it should be limited. Which is obviously also the case, because often that entity has no other activities, it has no other assets, so it's a bankruptcy remote vehicle. But what I've seen in my practice as a litigator years ago, it was not in an Islamic financial structure, but in conventional financial structures where you had bankruptcy remote SPVs, is that bankruptcy remote SPVs can go bankrupt. And if it does, you need to have a legal solution for that as well. Because if you have a SPV that's not doing what it's supposed to do under its articles of association or whatsoever, we should have thought about it from a legal perspective, and we should know what happens then if that SPV becomes bankrupt. And that's one of the points that I would like you to keep in mind for a second. The second one is that what some people also say is that, and it also happens in practice, is that one SPV is being used for several sukuk issuances, which obviously can decrease transaction costs and can have all kinds of benefits. One of the risks that might come up there, and we don't see this much in practice, but we have a couple of structures that have done this, is that there might be a commingling of assets, especially in a bankruptcy scenario. That's also one thing that we have to keep in mind there. That's the role of the SPV. Now, for the sukuk certificates, once again, Sharia perspective is saying sukuk holders own the underlying assets, and this comes down to the point that we were discussing. From a legal perspective, if you really look into the structure, the sukuk holders basically are investors in capital markets. They are not interested indeed in the use of a real estate building, in an ownership in, let's say, the classical sense where I own my house and I would like to use it on a daily basis. They're basically investing in securities, financial paper, and they're basically entitled to what the terms and condition of that sukuk is giving them, which are periodic payments and the principal amount, if you strictly look into this from a financial markets perspective. Now the question comes up, how are we still going to make sure that from the Sharia perspective is being respected here and that there indeed is some form of legal ownership? And I think that that's the danger of legal engineering on the level of the SPV and the originator. Because if the assets are not ring-fenced, the SPV has no legal ownership. And with legal ownership, I mean ownership that you could enforce in a bankruptcy scenario. So that you can go to the originator and say, as a bankruptcy trustee of the SPV, you could go to the bankruptcy trustee of the bankrupt originator and you could say, these assets are not form of your bankruptcy because they have been transferred to me as the SPV, as the owner of these securities. I think that's the ultimate test for having that ownership. If that doesn't happen, then it means that as a Sukuk holder, you're actually 2 steps away from those assets. Because then you might even have the financial entitlements to a beneficial ownership or to the right of use whatsoever of an asset that's far away from you. And I mean, the question is this acceptable from a Sharia compliant perspective? If it is, then the next question is, what's the main difference between a lot of types of bonds then? That's one thing. And the second thing is, if it's not, and to be honest, I think in most Sukuk structures, when we look at the Sharia perspective, when we look at the IOP standards, we are talking about a true sale and the sale and lease back. And if that is the Sharia perspective, with a lot of Sharia scholars are also confirming, then I think you at least need to make sure that that ownership is with SPV and that as a Sukuk holder you are entitled to those rights. And that actually brings me to the end of my presentation. I think with the transnational legal framework, these are a couple of things that we need to keep in mind, especially to make sure that in a default scenario and in case of litigation, as a Sukuk holder, you are entitled to what has been promised to you. And I think the most important 2 issues are basically the 2 issues on the transfer of ownership and on the position of the SPV as a bankruptcy remote vehicle. And a last point on the bankruptcy remote vehicle is that what we've seen is that the use of trust laws under English law, the use of a trust is quite helpful there, because if you create a trust, beneficial ownership goes to the Sukuk holders. In case of a bankruptcy of the trustee, those assets will not fall into the bankruptcy estate of the trustee. So that gives you that protection as well. But the creation of a trust for Sukuk structure has no Sharia background. So this is something that came up in practice because we were indeed looking at asset-backed or asset-based securities, mainly the securitization market, and we saw the use of trusts there, and we duplicated that in Sukuk transactions as well. What's interesting is that in jurisdictions such as the Netherlands, such as Dubai back in 2009, where they do not have trust laws, we need to think of ways how to deal with this. What is the main purpose of the creation of a trust? Now, if that is the transfer of beneficial ownership, you could do the same with the transfer of what we call, for example, in the Netherlands, economic ownership. You're saying you're entitled to the economic benefits, and that's it. But if it's also a mechanism to give protection in bankruptcy, then we should also come with the requirements that there needs to be security rights for the Sukuk holders directly on those assets. And not for them to hold it directly. They can do that through a security agent. But they have that level of protection. And these are some of the issues and food for thought that I would like to give to you and that we should keep in mind going forward, I would say. Thank you very much.
Thank you very much, Omar.